for tuning in to today's webinar on Domestic Tax Update. My name is Diane and I will be your moderator. Before we get started, I'd like to go through a few housekeeping items before we introduce our speakers. First, we encourage you to ask questions throughout the presentation. You'll see a webinar pane that you can use to enter your questions. Just click the red button to send the question to our presenters. They will answer the questions as time allows at the end of the presentation. Secondly, we'd like to make sure that you have excellent audio quality, so please select the appropriate setting. If you're using a telephone, please click the Use Telephone Audio mode, or if you're listening through your computer, then select the Use the mic and speaker option. Also, to qualify for California CE, you must use a personal computer and no PDAs, please, and log in with your own unique URL. Be logged into our online software for at least 50 consecutive minutes with the scheduled time frame of the webinar, and actively respond to 75% of the polling questions, and then at the end, complete an evaluation survey. So I'd like to take this opportunity to introduce our presenters. First, please welcome David Sordello. He's a CPA and partner in charge of tax. He has 21 years of experience in corporate tax compliance, planning, and implementation of sophisticated tax strategies for complex multi-entity private and publicly held companies. He spent 17 years with the Big Four firm, where he served that firm's most prominent semiconductor, software, and internet technology companies. David has extensive experience assisting clients with accounting for income taxes, including FAS 109 and FIN 48, pre-IPO, mergers and acquisitions, R&D tax credits, tax audits, and state and local taxations. He has served some of the biggest clients here in Silicon Valley, and also those technology clients who are on that fast-growing track to become a large client, technology client. So David, welcome.
Thank you, Diane.
It's great to have you here with us. And I'd like to introduce our second presenter, Robert Cooney. He's a CPA and consultant for Armanino, and he has 25 years of experience assisting large and medium-sized public and private multi-state companies with strategic tax restructuring, transactional analysis, audit resolution, negotiations, and compliance in the areas of tax for income, franchise, and sales and use tax. He earned his Bachelor of Arts degree in Business Administration and Finance Accounting from the University of St. Thomas, St. Paul, Minnesota, and he is an accountant for actually both California and Minnesota. So Bob, thank you, and we're glad you could join us today.
Thanks, Diane.
All right, so we're going to review our learning objectives for today. We will examine key federal business extenders, including bonus depreciation, R&D credits, and the look-through rule. Also, we'll review the impact of the California Proposition 39 on your organization and discuss the recent tax law court decisions, regulations, and other franchise tax board rulings, legal rulings and notices. And then lastly, identify several potential planning opportunities to reduce federal and state tax. So David, I'll turn it over to you to review the agenda with our audience.
Thanks, Diane.
Sure.
And thanks a lot for making both Bob and I younger in our years of experience, but we'll be a little more spry than on the call today. So the first thing we're going to cover is just a quick update on some of the recent legislation that only took the Congress a few months to get passed with the fiscal cliff. We'll start with that, with bonus depreciation, research credits, and this look-through rule. And then we'll talk about trending tax topics, some of the areas around mobile workforce, and I'll explain what that is and what that means when we get there. Kind of the new landscape of the financial statement audits that we're encountering, especially around tax provisions and accruals, and other issues that we're seeing with all the new cloud-based type companies out in the marketplace. We'll discuss various planning opportunities, and then Bob will go through an extensive state tax law update, or at least hit the highlights of them, focusing in on what California Prop 39 means to companies and other major tax law changes. And then finally we'll talk about some additional planning opportunities on the state side as well. So with that, let's go to our first polling question, Diane.
There you go. So our first polling question is, the R&D credit is for taxpayers of any size that design, develop, or improve products, processes, techniques, and formulas. Do you find that to be true, false, or not sure? All right. So many of you know this answer. We've got 90% of our voters entering their answer, and we're going to close the polls in 5, 4, 3, 2, 1. All right. Well, that's a good lead-in for you, David, in the federal updates.
Great. And I think the answer to that was true, although you probably could also say it was false or not complete, because other things potentially could also qualify for the credit. So maybe it was a trick question there. So the first thing we'll cover is just the federal tax law update. As many of you probably followed the news, we had this fiscal cliff, where the government, I guess, was going to run out of money and stop paying people, which probably would have saved us some money, and we probably could have paid some less taxes. In any event, they did finally get around to passing the law. The law was passed in January, right at the beginning of January. The president signed with some special electric pen from Hawaii. And the major principles that impacted corporate America, there was a lot of issues that impacted individual taxes, and obviously for a lot of people individual taxes are going up, both from a federal perspective and then separately in California. But there was a few things that impacted corporations. The first was the extension of the 50% bonus depreciation for 2013. Essentially what that is certain assets, most of the things that you would use in business, tangible property and software, you can take accelerated, basically a 50% bonus depreciation on those assets. So it's supposed to stimulate the economy and continued purchases. So that was good news. The second thing was something that we were waiting for 6 months again, or actually a year this time. The R&D credit had expired for federal purposes at 12/31/12. 12/31/11. It was not in the law for 12/31/12, but the powers that be did retroactively extend the current R&D credit for 2012 and for 2013. So many companies are now going back and calculating the credit for their 2012 tax returns, as well as for the 2012 provisions. And I'll talk a little bit about that in a second. The other one is, I'm not going to spend too much time on it, but if you're a complex international company, there's a provision that's called the look-through principle that lets you look through certain entities and not have what's called subpart F and other types of income. So that was actually retroactively extended. So the fact that they did us a favor and did all this in January, basically for calendar year companies, created a lot of complexity. That being that the rules around tax accrual accounting is that if the law is not enacted at the time that you're doing your financial statement, you can't take that law into account. So what that meant for many companies on the R&D credit and the look-through rules is we had to pretend, even though we knew at the time we were issuing the financials that the R&D credit and the look-through rules have been passed, we couldn't take the benefit for them. And so what that leads to is some level of complexity, increased tax rates, or in the 12/31/12 returns, or financial statements. And now we're going to have to basically discreetly treat that as if it was always that way in Q1. And so that's mainly an issue for